Hello traders, Gary Wagner here, approximately 9:45 in Honolulu, 3:35 in New York. It is Wednesday, 22nd day of July, 2015, and this is the daily report for gold and silver. Once again, we do have the precious metals trading under pressure. Gold right now in the COMEX is off about $11.40, trading at $10.92 and change. In terms of the cash market, that is at $93.29, off about $7.50 on the day. We have seen gold trade to a low of $10.8560 and a high of $11.02. In terms of silver, silver also down today, off not that much, about 3 cents on the day, $14.75, low $14.58 and a high $88.50. We'll talk about silver in a little bit. So traders, if you recall from yesterday's show, obviously we did get stopped out of our long trade, but I also talked about the fact that if it came down and hit that stop, it was really telling us that this market is headed substantially lower, and just to simply reverse our position. In other words, take a long position, reverse it into a short position. Traders that took that are in roughly in this area. I sent out a special trade alert early this morning. Market was trading between 88 and 89 when I sent it out. Ran up to about 91 when the emails actually got out. So most traders are short roughly at 1091. Now, the rationale behind it is obviously we could not hold any of the most recent moves up. We had a very, very small move up, and that was, of course, just followed by this dramatic sell-off that we're witnessing today. When we take a look at the actual candlesticks themselves, this was that false breakout, as one analyst called it, a dead cat jumping, so to speak. And as you can see today, these are the lows down about 85. And the market is currently trading, as I said, roughly at 1091. Now, expectations on this trade in terms of where I think this market could go to, we really want to look at a weekly chart for that. Let's go ahead and pull that up. And traders, the target that we're looking at is going to be based upon some lows, and realize that at this point, we have to go back to prior 2011, actually into 2010. And as you can see, we're matching up this particular low here. It's almost even, but with this one area here. And I really believe we could see a matching low come in that's equal to this low that we received in February. Now, if I recall, that particular low was at around 1065 in that particular area. That's when George Soros actually came in and bought. That's why I remember this particular dip so well, because the market had come up, it tested about 1250 and then tracked down to roughly just above $1,000. So we've got to go back really to this point right here before we can find any matching low. As I said, we're trading at 91. Also, when we look at our Elliott Wave forecast, that's looking for lower pricing anywhere between, call it 1030 and 1028. That's where that's pegging that low at. So I think that we are going to see this market drift lower. I don't think that we've completed this bearish move that we've seen most recently. And as I said, we are now at lows that we haven't been at since February of 2010. So traders, when we convert our weekly chart into a Japanese average chart, you can see the tremendous sell-off that we had today and the strength of this downtrend. Look at the size of the body size of this candle. We have had an absence over the last 4 weeks of lower wicks. And as I said, we've made a new low, a low that we haven't seen since February 2010. And when we look, of course, at our daily chart, you can see that these last few days we have had this market's trend have a lot of energy and continues to have energy in the market in terms of potential for more breaking to the downside. Another technical study that I believe really hones in on the fact that we could witness tremendous downside pressure is this utter break. When we look at the move that we saw when the market was trading roughly at 700, up to the high of 1900, in other words, this last huge bull run. Then we run our Fibonacci retracement at 1150. That was our 61% retracement. Now, you can see these bottoms in here showing support in this particular area, and I really believe that this is an important level. And once this level was truly breached here, as you can see this month, this is a very, very long-term monthly chart, but this is really a signal that we could head much lower. Where? Well, there's a couple of different areas that I'm looking at in terms of the downside potential. Take a look at the 75% retracement level. It comes in roughly at 1,000. And so that the next real technical level of support on a long-term basis in this market comes in at $1,000 per ounce. And so it is for that reason that I believe that there is an extreme amount of downside potential. I think probably $100, anywhere between, call it $60 if it lands at around 1030 to about 1,000 if it lands at 1,000, about $90 from this particular point. So traders, as you know, we took a reversal. We're short in gold, but I have not sent out any trigger, buy or sell signal in silver, and I wanted to spend a moment and kind of explain my rationale behind it. When we looked at our gold chart, it's been an utter sell-off, and you can see it going to lower lows. When we look at silver, however, this is a half-a-day chart. We can see the initial sell-off. We can see the market hitting at roughly 1450, which was our target. But if you look over these last couple of candles, you have these very, very pivotal dojis. They're not breaking hard. They're not showing dynamic trend strength, and that's the real reason we have taken short positions in gold but are sidelined in silver. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for another daily update and review. Bye-bye.